Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Friday. In today's program, I want to discuss a little bit about the US dollar, as it looks like it's been trying throughout the European session, trying to have a bit of a fight against the majors. And I want to ask the question, is the market beginning to have a think about the Fed? But before I get into that, don't forget, these little episodes or these videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before any trade. With that the way, get started. So yes, we have seen a little bit throughout the session, a little bit of a dollar fight back. And I want to ask the question, is it going to end on a high? It's had a 2-day sell-off. Ever since the US CPI came out on Wednesday, we have seen a weak dollar across the board. And we've had 2 days of very sort of risk appetite with the euro, the sterling, the yen, things of this nature. But I've noticed, we are seeing a little bit of a dollar fight back at the moment, not only convincing fight back, but a little bit of a fight back. And I want to ask the question, is the market beginning to be fearful of the Fed? Now, those of you who were kind enough to join me yesterday, I did a little video on this. I asked the question, don't fight Fed was the name of the video, where basically I was saying that I think the market is challenging the Fed too much, or thinking that the Fed will not be aggressive in September or from then onwards because of this economic data. But in general, the market, on the back of that CPI reading, the market was sort of considering that the Fed may do a 50 basic point rate hike in September, not the 75, which a lot of people were fearful, or even 100, which the market was also fearful. So they're thinking of just doing 50, but they're beginning, and it's saying the market hasn't changed, it's been said completely, but it's beginning to have second thoughts. Like I said, I think personally, the market is getting ahead of it. I really think, this is my personal opinion, I really do think the Fed will continue to be aggressive with interest rates. I really do. So, but that's my personal opinion. And the other reason why the market's beginning to think twice is we've had the Fed policymakers, a number of them have come out to be very vocal and in great numbers of their 2% target. Their inflation target is getting, their whole goal is to get inflation back down to 2%. And it's at 8.5. Yes, lower than last reading with 9.1, but it's still 8.5%. So, the market's beginning to get second thoughts. And the other thing, just to underline this, sorry, throat's a bit dry. The San Francisco Fed president, Mary Daly, she said yesterday, makes sense for a 50 basic point rate hike, but she is open to a bigger rate hike if the data warrants it. So, so like I said, the market is beginning to get second thoughts. And like I said yesterday, I don't think it's wise to challenge the Fed. As the old saying is, don't fight the Fed. Anyway, on something else, the sterling in particular is under pressure at the moment, because obviously, don't forget, those of you who were kind enough to join me this morning, we had the UK GDP came in, and it was announced at negative 0.1%. And don't forget, there is a lot of gloom, doom and gloom with the UK at the moment. On back of what the Bank of England said 2 weeks ago. They mentioned inflation getting to 13.3% in October. They expect recession in quarter four in the UK, and this recession will last for 5 quarters. And they won't reach their inflation target of 2% till 2025. So there's a lot of doom and gloom on the sterling. Let's have a quick look at how the market is and see if we can see a little bit of this dollar fight back at the moment. Okay, so first up we have the euro. This is on a 30-minute chart, and as you can see, like I say, it was at the beginning of the session. I mean, this is the bull run, okay, which went back on the CPI. Okay, obviously this was the key level. It couldn't break it, 1.03606, and it's now under pressure. Fund under this level initially, which was giving it a little bit of support, 1.022921. Currently, we're seeing dollar strength again, currently trading at 1.02593, and this is the 200-day moving average is challenging as well. On a daily, we can have a look at the levels in particular on a daily. There we go. We see it's okay. Yeah, it looks like at the moment, as the market stands, the dollar is going to obviously end on a high against a single currency. The sterling, like I've already mentioned, under a lot of pressure already, because of that economic data coming in as well, and what the Bank of England said. Also at the same time, benefited dramatically from the CPI, from risk appetite, changing its mind at the moment, currently trading at 121.03. So that is under pressure there as well. Next real key level for the sterling, it's 1.20034. That's the level we need to keep an eye on. What else? Let's have a quick look at the dollar yen. Don't forget the dollar yen went under 132. But again, we're seeing dollar strength. The dollar mounting a fight back quite clearly, and it's now above the 133 level again. Don't forget, it fell to 132 on the back of the CPI. Now fighting back, currently trading at 133.64. The only one which is not benefiting or not having so much a fight back or letting dollar beat it is gold, trading currently above 1,791. It's a bit of a profit taking, I can see at the moment, but trading now at $1,794.53. So yeah, let's have a quick look and see how the market is doing, if the rally is continuing. Okay, it's not as dramatic as the currencies. Obviously, we've seen dollar strength, but you can see the market beginning to question that, question itself, whether it got it right about the Fed. It's S&P 500 trading at 4,228 points, and the Nasdaq, 13,388 points. So not still trading fairly bullish. Just so you know, if it does end with gains today, that's going to be the 4th weekly gain for the Nasdaq. So that's good news for the Nasdaq. So yeah, that's what's happening in the market. And like I say, how does everybody feel? I feel exhausted because what a week we've had. What a week we have had. What a week. Let's go through it. I call this week Inflation Week because we all know the big event was Wednesday with the US CPI. But before that, we had the market sort of treading water a little bit as it's waiting for Wednesday. And then we had obviously 2 opposing analysts, one from JP Morgan and another from Morgan Stanley, both with very different views. And we discussed that. One was very bullish on the market, thinking the bear rally was over. And the other one, Mark Wilson, he believed, a very famous analyst as well, he believed that the bear market was not over. And like I say, he was the one who correctly predicted the sell-off at the beginning of the year. So, but either way, we had a slow build up, but boom, that all changed on Wednesday when the US CPI came in lower than expected, 8.5% versus 8.7% expected. At the same time, core came in a lot lower than anticipated. It came at 5.9%, lower than the anticipation rate of 6.1%. But like I said at the time, it was the same as last month. But anyway, the market ignored that and got very optimistic, and we've seen a big rally in the markets over the last 2 days. Like I say, maybe, just maybe now, it's beginning to have second thoughts about that. Then after that, we had Disney. Disney, of course. And Disney is now won the stream wars. It was announced that earnings was a lot higher than anticipated, but what stood out the most is they've got now more subscribers than Netflix. They've now got 221 million subscribers as opposed to Netflix's 220 million subscribers. Doesn't sound like a big difference, but here is the big thing. Netflix was launched in 2007 and Disney was only launched in 2019. So Disney has had a pretty good week. And then capping it all off, we had UK GDP today at negative 0.1%. So it's been a busy week. It has indeed been a busy week. Okay, Monday, Tuesday was a little slow. Just a minute, it was slow because the market was waiting for bated breath for Wednesday. But since Wednesday, we've seen a lot of volatility in the market. And like I say, I'm half exhausted, half excited about the week we've just had. But here's the thing. We've got another week to come. Another week. And next week is packed full of data. We have Bank of Japan, a gross domestic product, UK claimant count, UK unemployment rate, Canadian CPI, UK CPI. Will it hit double digits? EU GDP, US retail sales, and the big one, FOMC minutes, followed up by EU CPI, US initial claims, and UK retail sales. But the big one is going to be the FOMC minutes. That potentially could be huge. I probably would do a special watch along on that, probably from my home again, like I did with the interest rate decision. But it's going to be a big one because then the market will hopefully try and find out what the Fed might do come September. So that's going to be potentially a real big event. So it's chock-a-block next week, chock-a-block, and I hope you all can come and join me for these events. Anyways, not just that. Something else is special is happening next week, and that is the launch of our brand new tixee Live series, brand new series, and it's called #AskJames. #AskJames. Now, we already do 2 different types of tixee Live videos. We do the tixee Live, the one you're watching, which is basically an update on what is happening in the market. And we do the tixee Live Watch Along series, which is a series dedicated to watching key economic events as they happen. But we're doing another series as well. And it's called, like I say, #AskJames. And this is different. And this series, I need your help because this series is pure education. It's still market driven, but it's pure education. These videos are dedicated for discussing a topic of your choice. This is where you come in. This is where I need your help. I need you to share with me your ideas of what you want to learn, what you want me to discuss. I will see these ideas and I'll do a video, especially a live broadcast, especially for them. In fact, our very first video was a suggestion by a frequent viewer, SMF790. And they've asked for a topic to be about market jargon, explaining market jargon. So the very first #AskJames is going to be pure education. I'm going to purely focus on this topic and I will discuss market jargon. I'll explain to you what a bull is, what a bear is, what a hawk is, what a dove is, etc., etc., etc. Because the financial service industry is like many other industries that have its secret language. Okay, so please share me any ideas, any topics you wish to discuss. You can share it with me live on air, or you can put it in the comments below on YouTube and Facebook to say #AskJames and the subject of your choice. And I will do a video just about that. It's all for you. So whatever you want a topic about. In fact, we've had another suggestion already by a Jay Davis today, and they want to do a video on explaining candlesticks, which again, that will be the next episode of #AskJames. I will be doing that. So please keep these topics coming in because without these I need these topics from you so I know what you'll want to learn. And so anyway, the first episode is next week, Friday, the 19th of August. And I hope you can join me for that. Anyway, how the market stands at the moment. FTSE currently trading slightly higher 0.29%. DAX currently trading around at 0.52%, and Eurostoxx 50 currently trading at 0.64%. Don't forget, you can ask me questions anytime you wish, or like I said, we'll share your topic ideas, like Jay Davis today did. This very last person left a suggestion on the comments live on air. I got very excited because I love talking about candlesticks. So I will be doing that video really soon. So yeah, or just simply say hello. How's everybody else's week been? Has it been busy? Enjoyed it? Okay, not a problem. If you think of a question later, don't forget, you can always put it in the comments on either YouTube or Facebook, and I will see them, and I will reply to them next time I go live on air. So don't forget that. I'll be back on air on Monday. I'll just be doing one video on Monday. I'll be doing the 11 o'clock show. Sorry, the 8 a.m. UTC show. And we'll discuss the big week ahead in a bit more detail. So please come and join me for that. But on Tuesday, I'll be back on again as normal at 8 a.m. UTC and at 2 p.m. UTC. 8 a.m. to discuss the European session, and 8 a.m. And 2 p.m. UTC. I get confused. 2 p.m. UTC to discuss the US session. Okay, if there is no questions, not to worry. Like I always say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and you've put up with me, my over-the-top enthusiasm for the markets, which I just can't help because I love the markets, give me one of those. It's nice to know that you like what I do. Anyway, till next time, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence. Of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.